All right, mic check, mic check. Um, so for those of you all have been telling me like the audio quality can get kind of fuzzy sometimes. Appreciate that. I definitely know. Sometimes I go back and watch my own videos, and I can tell where it gets choppy. I'm not a YouTuber, so I really don't care. To be honest, I just kind of do these as like little tidbits. I'm not making money like from YouTube off doing videos. But I did order a new mic, so we'll see where that sound quality goes. But anyway, kind of wanted to wait for the daily candle to finish, but at the same time, I'll be busy, so decided to just go ahead and make this video now. Um, so first, what we'll do is we'll go ahead and mark out the levels I've been looking at, and then from there, we'll see kind of where I expect things to go, or at least what I'm looking at. So that is the most recent daily bearish order block. As you can see, I take it from wick to wick, don't discriminate with the candle body. As I've said many times before, if I want to get specific, if I want to be more detailed within here, because you have to, I do acknowledge that this is, $300 range. And if you position trade or even swing trade a little bit, that could be good for you. But for a lot of people, $300 is too wide of a range. And so what I'll do is I'll zoom in. And so what I'm going to look for is I'm going to look for areas where there was an up move right before a down move. And so I can use, take this off. I could use this candle. This kind of works here. And also this candle right here. These are the two areas where I see a small up move right before a major dump. And so really just depending on how you want to draw them. You have that one, and then you kind of have this one. Actually, you do that in a different color. Put that in like light blue or something. But yeah, so those are bearish order blocks right there. Both of these would pretty much capture what you care about pretty well. The purple one, this would capture like the wicks. As you can see, we kind of wicked up here once, twice. So if you're trying to be short from this range, this upper one would have been great. I literally had never even looked at this before, and so I just did this video. And I look right, and they just happen to line up. So this one would have caught like the bodies of this consolidation. It also would have caught this wick. If you want to be short from this 4-hour order block, you can still on the 4-hour time frame. So all I know is that we're at resistance, right? That's what this tells me. I'm gonna go ahead and use this top one because that's kind of the one I've been looking at all day. Purple. And this is the order block I have been paying attention to. That being said, I really just wanted to look straight up at volume. So I'm going to show you pretty much what I give a fuck about. So the main volume indicators I use, I'm going to use Weiss wave volume, which there isn't really a great script for Weiss waves on TradingView, but Lazy Bear probably has the best one, so I use his. I keep trend detection at 2, which is the default, but even that's subjective. You can get different stories depending on how you change the settings. I just keep it the default. Of course, I use normal volume as well, and I actually don't like that clouding up price, so I usually unmerge it down so it's in its own section. Lazy Bear is probably the best for indicators on volume. You have a shit ton of them, but also the OBV oscillator, which literally just shows you on balance volume, but in a much more visually appealing manner, in a way that makes it easy to draw divergences. And so that's pretty much these. And then I'll also look at the volume profile for a fixed range. And so we can pretty much just take the local top here down to current price. And that's pretty much how I do it. I like to keep the point of control so I know where it currently is, and I also like the developing point of control, which basically just tells you where the high volume nodes are. And so yeah, this is pretty much like my setup when I'm like, okay, time to do volume analysis. This is literally what I do. So just looking at this, immediately what pops out is the trend of price. So if I just draw a trend line of looking at the closes, we're making higher lows on the close, and we're making higher highs on price, on the closes of price as well. So kind of in that little channel. What I am noticing is that as soon as we made this low, where we started taking off, we had this large impulse right here. And then we started, making these series of higher lows and higher highs. After the impulse, volume has been decreasing as price goes up. I don't like that. I don't like that. And if you're bear or you're bullish, you shouldn't like this either. This should concern you that there isn't a lot of buying pressure. And then when you look at the Weiss wave volume, even here it's kind of weird. I don't really know. This, again, it's subjective. It goes away depending on if you change the settings for trend detection to be 2 waves or 3 or whatever. But if you keep it on the default, you see there was a lot of like distribution right here, a lot of selling, not much buying that happened. But we didn't break this trend line. We actually bounced up. But then you can see the response, these 2 pieces of buy volume. Buy pressure as response was, I don't even know what you want to call it, pitiful. So you see we had this wave of down volume, and then when it was time for the bulls to show up, their response was pitiful. Like it's literally a story. This is how you would read the volume in this chart. You can very much get the same story from normal volume, but I think this tells it a lot better. And then the last thing that I'm looking at, very much the same story of volume, is again, higher highs on volume, lower highs, or higher highs on price, lower highs on the volume oscillator, OBV oscillator. Nothing about this is bullish, right? That doesn't necessarily mean enter a short. There's different indicators you want to use for entries. But as far as bias, you don't like this as a bias. This concerns you if you're on Team Bull. Yeah, so here we are. And then last piece of volume is what do you call this? Volume profile, which just tells you volume by price. On TradingView, it's called volume profile, but on different charting sites, it may be called something different. Let's get rid of that. The point of control is the place of highest traded volume. It often acts as a magnet for price. And you can see it's acting, and it also acts as support and resistance. Currently, we're under it, traded up into it, wicked up here a little bit, and you can see it's acting as resistance. So a break of this level around 6.74, that would be important. That's something you should watch out for. And really a break of this order block in general is important. So you want to see something like, we may retrace, but you want to see a break here and then come back to retest that support and take off. If you're smart, you enter a long position here. You don't enter a long position here. That would be buying the top. Here is buying the bottom, right? It's very simple. You can literally buy at very similar price points, but depending on the perspective of what price is doing, you're either buying the top or the bottom. trying to think what else is noteworthy. Oh, bullish scenario. So again, just to be unbiased, you should always make it a point to chart out bullish and bearish scenarios. These EMAs are important. They are the 12 and what is it? 12 and 26. What am I using? 12 and 26 EMAs, yes. These will pretty much always act as support and resistance for price. You can see during this downtrend, they acted as resistance on a number of different occasions. Whenever we came up inside, we dumped straight out. And that's pretty much just how that works. Here is interesting. We consolidated in the middle, which we do expect, but then we pumped out. And now what we're doing is we're retracing downwards. Bullish scenario, clearly we take this little consolidation range, which I'm going to draw using the bottom wick up to the closes of like the basing candles, what you call them basing candles. Oops. Make it green just so you know we're looking at bullish scenarios. You're looking for a retrace down here into this area where these EMAs are, maybe around 6.5. You're looking to enter a long position here with a stop under those wicks. And you want to target, I don't know, maybe you want to target these lows. Boom. This is like build a long position here, stop under here, say, shit, we were wrong. Long position, target here. This makes sense. Again, looking at the 4-hour time frame, we've been using these EMAs as support for a long time. This was interesting. We actually dumped below them, closed below both, retraced back in and dumped out, but then we made a quick recovery, closed above, again, used them as support, and then took off. And now you see us interacting with them again. That's why it's, you know, there's, I guess, a notification. That's why it's great to build a long position here. As you can see, the 4 hours showing us something similar as the daily. If we break below here, we're probably going to close above the slow EMA, the 26, which is at 6.62 on the 4 hour, but that means we're probably going to wick in here. So if you're building a long position, essentially this means you're going to catch knives if you believe that these EMAs hold. So that's bullish. Similar EMAs, the guppy, if you want to get more fancy with it, on the 1 hour has been very bullish short term. So if you trade like intraday time frames, of course you'd be looking for longs, and these actually would have been great opportunities for you. And here you'd be looking to go long again on the 4 hour. And again, when you see trend shifts, what you do is you zoom in to see the changes, and then you want to see them propagate out. And once they propagate out to a time frame that you want to use as trend confirmation, then you say the trend has changed. That definition is very important because that means the trend is different for different people. And I think that's a really important thing people have to understand. Somebody can be short and somebody can be long at the same time, and they can both be right. It depends on what time frame you're looking at. So on the 1 hour, guppy is flipped bullish. On the 4 hour, the guppy has flipped bullish, where the slow EMAs are expanding, the fast EMAs are expanding, both bullish. Now what you're looking for is for it to propagate out to the daily time frame. Nothing about the daily time frame looks bullish at the moment. If anything, this is prime short material because we've pushed the slow EMAs all the way up. We're actually above them, kind of using them as support. But now we're inside, or the fast EMAs, now we're inside the slow EMAs. And essentially when any set of EMAs compresses, once they expand, you're going to get a very powerful and volatile move. So if you're of, the bearish bias, you would be like, oh, the fast EMAs are compressing. Once they expand, we're going to dump all the way down, and we might even break some of these lows. Actually, we will break some of these lows just based off what the EMAs look like. And if you're bullish, you kind of want this level to maintain support, and then you really aren't going to be bullish until you break the slow EMAs up here at about 7.2, and then you want to catch a retrace down. And that's essentially what you're looking at there. And of course, the bear scenario, as we said, would be these EMAs expand and push us downwards. I can't really think of too many bullish scenarios just because volume is the primary indicator, and that's why I let the video off with that. Volume look horrible. If you look on the daily time frame, you can see this large burst of buy volume on the Weiss wave. But that, I'm going to show you why that necessarily isn't like extremely bullish. One, because of all of this bear volume, as you can see, has been decreasing. The buy volume has been increasing, but we haven't like eclipsed some of these highs here. But also because of the length of time it took to get this high. This is about 8, or really 10 days because it's not inclusive. It's about 10 days of buy volume to reach these levels. Whereas over here, when bears were in full control, it took 7 days to get even more volume, or about the same level, right? Again, when bears were in full control, it took 7 days to eclipse that level or get to about that level. Bulls have taken much longer to accumulate this much buy volume, and they've gotten, and it hasn't been as large of a result. And so that's why you necessarily wouldn't look at that and be like, oh, bull season. And then also this is pitiful right here. Pretty much all volume actually has been under the moving average since this consolidation and this bounce, quote unquote, really more like a retracement. Whereas when we were pushing downwards, we were consistently getting, not consistently, but on the down moves, we were getting volume that was above the moving average, right? So why is it that when we go up, we're not getting volume above the moving average? These are the things you need to ask yourself. B-bands, got the top B-band at about 7K. Will we touch it? Maybe, I don't know. Again, support looks to be around 6.3, 6.4, the B-band median here on the 4 hour. We push this top band right here. So we've pushed the top band, but now we're going to look to see if we can walk this top band and keep pushing it. A good example is like here. This whole region. Great example of pushing the bottom band and then continuing to push it down. That is bearish momentum. Here we want to see the same thing. We want to see bulls push the top band and then keep pushing it. Right now, we're not observing that. And that's pretty much all there is to it. This right here took out a couple long positions that got liquidated on BitMEX. Nothing noteworthy, just more sideways movement. I guess the other thing I should point out that I'm looking at as far as diagonals, you can see I'm really big on horizontals, but as far as diagonals are concerned, I see this. Boom. Boom. So I see a clean break here. And then we found support here. Now we're looking for another clean break. This is bearish. A good example of when we saw this in the past, and I've put this on the video a number of times, or on the channel, is when you had this. right? So this is currently what we're looking at. Breaking diagonal supports is bearish, a sign of bullish weakness. So if this breaks, whenever this trend line breaks, we expect to see a lot of downward momentum. A good example of the bullish side of the same thing is breaking resistances. So you have this, and then you have this. I'm not even going to try and pronounce the dude's name who comes up with these, but they're C forks. That's just what I'll call them. But yeah, same principle but backwards. Breaking diagonal resistances. This is breaking diagonal supports. We're looking for something like this to take place, or at least we want to watch the reaction once we come down and touch that. And we may never touch it. We may just, moon upwards. I don't think so, but definitely possible. We're going to see if bulls eat up this wick and we finish up here. That'll be interesting to see if there's buying pressure coming into the market once we touch these highs. But yeah, it's pretty much all there is in addition to that top trend line. It's another thing I'm looking at. Let me mark this out one more time just so you all see it. 1, 2. So we have this trend line of resistance. We broke this support, found new support here. Now we met up to this trend line again. And now we're in this channel, basically. So we're going to see our reaction to this. Again, it just doesn't look like bulls are just going to completely rip through this resistance. It looks more likely that bears are going to break this support, just based on volume. But we'll see how things work. That's pretty much all there is. So I'll see you all later.